Hello, I'm Scott Piper with MRA Short Sale Solutions. We're a short sale facilitation firm. Today, we're going to discuss the many options that a homeowner has when faced with owing more money than their home is currently worth. We have learned that homeowners have 7 choices when faced with a mortgage that is greater than the value of their property or a monthly payment that they can no longer afford. The first choice is loan modification. This is where you get an adjustment to the terms of your loan from your current lender. Now, unfortunately, most of the applicants that apply for a loan modification are denied by their lender for that modification, and thus forcing homeowners into foreclosure in some cases. The second choice you may have is renting the property out. This will create some cash flow on the property to help subsidize that payment that might be overbearing. You can then move you and your family to a smaller home with a lower payment, or maybe even move in with some friends and family temporarily to get through your current financial crisis. The third choice is paying down the loan and selling the property. This choice requires some cash reserves, however. If you are going to pay down the loan to the market value so you can sell the property, it's a good exit strategy. There's no adverse effect to your credit, and you may be able to purchase in the market again and be on your way. Your fourth choice is short sale. This has become the most popular choice amongst homeowners today for many reasons. First of which, the government has enacted laws to protect homeowners in short sales against the bank. Banks are no longer allowed to pursue a deficiency for the amount of money they didn't get out of the short sale. Secondly, the impact to your credit could be far less than the next choices that we'll be discussing. And finally, your ability to return back to the market again as a homeowner, purchasing another home in as little as 2 years. These reasons make short sale a very inviting solution to the mortgage challenge you may be facing today on your home. Your fifth choice is a deed in lieu of foreclosure. This is where you actually surrender the property back to the lender. This would be an avenue that the bank would appreciate because you actually give the property back and they don't have to foreclose. They save some money on the transaction. However, what we've heard is that it is also recorded in your credit report just as it is a foreclosure. May not be the best solution, but certainly an option. Your sixth option is foreclosure. This is the do-nothing approach, and unfortunately many people choose this decision and it may not be necessary. Foreclosure carries with it heavy consequences. The increased exposure to your adverse credit rating that could stick with you for up to 7 years before you could become a homeowner again. Potential increased tax consequences. And finally, if you have a second mortgage, like a home equity line of credit, you may still owe that bank the full amount of that loan even after foreclosure. The seventh choice is bankruptcy. And unfortunately, many people are misadvised and jump to this solution immediately when it may not be necessary. However, if you've used your home as an ATM for the last many years and you now owe more on your home than it's worth, bankruptcy may be a consideration, something to talk about with a real estate attorney or a bankruptcy attorney. If you're considering a short sale or any of these 7 options and you'd like to get more information about your choices and the consequences or benefits, contact your Better Homes and Gardens real estate agent today. I'm certain that he or she would be happy to discuss all of these options with you.